like many others struggling to get funded, here we go. This is the perfect video to get funded using this strategy that I was able to pass multiple Top Step and Apex funded evaluations, and I was able to secure multiple payouts using the same strategy. I also will be going over the setup. Not only that, I will be going over how I'm able to align higher time frame biases to my trades, and how it's very important to align these higher time frame biases in order for the trade to have proper confirmation. If you're not aligning higher time frame bias with your lower time frame entries, then you're just gambling. So, because this model could be presented, but if the higher time frame is not aligning, then you shouldn't be entering the trade. So without further ado, here we go. Here are the credentials for those of y'all doubting, but passed this account a few months ago and had a very good risk to reward ratio using this setup. As well, here's the Apex funded account. But yeah, so basically right now I'm also doing another 150k eval, where I'm using this same setup to pass another 150k evaluation with Top Step. Currently we're around $3,000 away. Well, today I made a little scalp, $300 scalp, so we're around $2,700 away from getting our 150k eval. So hopefully by the end of next week I'm able to pass this and able to get a payout pretty quickly using the same setup. And if you guys want to update on that, let me know in the comments. Can do an update video on that. Just real quickly, for whoever is new here, we have a free sign up for my website, my brand new website. Was able to make this, took a long time to design, so please check that out. Link's gonna be in the bio after you sign up right here. It's gonna give you access to the Discord. You gotta verify your email, and it's gonna send you to the website. After the website verification, it's going to give you access to the dashboard. It's going to give you access to this beginner guide that I have for beginners. It's also going to give you trading basic knowledge. So I don't know if you might be an intermediate, experienced, or professional trader, whatever it might be. I'm going to be adding sections for everyone. By the end of the week, I'm going to be adding the intermediate and professional section for the website. As of right now, we have a beginner's guide where we have chart basics, trading psychology, whatever it might be. Go check that out if you're brand new to trading. I would highly advise it. Completely free. And we also have a trading basics section where we go over fair value gaps, order blocks, all the trading basics that you need to know. And basically we go over everything, show pictures, everything. So if you guys are brand new to trading, thinking about getting into trading, sign up for free. Completely free. All my education is going to be free. We also have some stock widgets with some basic stuff, just charts, economic calendar, basic stuff. And yeah, we're going to be adding the intermediate professional section soon, so stay tuned for that. But yeah, go ahead and sign up for that. It's completely free. And yeah, let's get into the video.
What I wanted to see was us react off of this 4-hour imbalance that we created on ES. Right. Alright, so now that I know that, we're coming into Friday knowing that we're coming into a 4-hour busy, meaning that price may potentially go up after it enters this area over here. I assume that the draw was higher after we saw market structure shift right here. So identify manipulation, I use a standard deviation to calculate where we could see a reversal or where price could go. And for those of you guys that don't believe that price is already timed in, I don't know what to tell you guys, because this is very precise in my eyes, right? So basically what the standard deviation does is when we take out sell side, which is right here, and we manipulate lower, a lot of the people that thought we were going to keep on going lower are trapped into trades, leading them to buy their positions that they were initially trying to go short in. Right, so this is how institutional traders or big institutions manipulate retail into thinking that we might be going lower when essentially they're manipulating them completely and we're going the opposite direction, right? So after we see this manipulation move, we draw the standard deviation, and look, is obviously after the fact, right? But where does price go to and it starts reversing? The -2 standard deviation, right? Okay, perfect. So we have a, let's write down our confluences right now. I'm just trying to help you guys see and how to add confluences. So our confluences right now are, we are in a daily and 4-hour busy. What does that mean? That means that we're potentially bullish. We're potentially trying to buy longs, right? So, but we can't just buy longs off of this move down, right? We can assume that price will do this, but until price doesn't have a market structure shift, we can't assume that price is just gonna head higher, just off of the standard deviation, all that, right? Price has to show us what it wants to do. It has to tell a story, right? So after we see this manipulation move, we're respecting a 4-hour BISI, we're respecting a daily BISI. Okay, now what do I have to do? I have to wait for price to confirm that we're going higher. So on the 5-minute, I wait for a market structure shift, which would be us breaking above this high right here. And so if you're an aggressive trader, you go off of the breaker, which could have been on a lower time frame. Some people could have gone long after we, just assuming that we're gonna come, there's a valid trade right here on the 2-minute, right? Where we can assume that price is gonna go into this internal buy side, right? On a bigger time frame, that is the market structure shift, right? So I like to stick to bigger time frames, and essentially I was waiting for us to come up here and rebalance down here into this 5-minute. So basically I waited for this to confirm that we're going higher. Market structure shift is another confluence. I expected us to come down here before heading higher, and that never happened, right? So far we got the daily and 4-hour BISI being respected. We have a liquidity sweep. We have displacement, right? These are all things adding to our bullish bias. And basically after we see all of these confluences, I usually stick to 3 or 4 confluences. Now I'm pretty sure I know where the draw on liquidity is, right? So just going off of, like, say we don't know what happened, right? And we go straight from after this manipulation move. After we see the manipulation, I go on the 15-minute and 1-hour time frame to see where the draw can be. So the draw could be this. Let's stick to the 1 hour because I usually stick to 1 hour time frame for my targets. So basically, where do we see buy side or stacked highs? That's what I do when I try looking for my potential TPs. So we have equal highs right here stacked in with a 15-minute or a 1 hour fair value gap right here. Basically, my TPs are usually at highs of certain levels. A little slower just to show y'all what I see live. So we come here, we have a big imbalance here, right? So we can't confirm that we're going higher until we disrespect this fair value gap. So I wanted us to use this fair value gap actually as an inverse. So once we see price displace, it creates a 2-minute fair value gap. And essentially when that happens, I would go on like the 5 or 15-minute just to see where can I take profits, right? So if I were y'all, I would have been like, okay, I could take profits here, I could take profits here, I could take profit here, and ultimate TP probably like up here, right? If you guys were to see the ROI on this trade alone, let's just say we hit all TPs. First of all, if y'all are new, I would stick to just 5 points TP from initial entry. So basically TP1 would be, let's just say this high, which is around 6 points. And our stop loss would be 5 points. So this ROI is 1 to 4, right? This means that I have to be profitable 1 time to break even on 4 trades. Essentially, I only have to print once, have a 1 W, and I would break even out of 4 trades. If I have 2 wins out of 4, think about just the ROI on that. And that's how basically you have risk management in trading. So besides all that, right, that's how I look for my TPs. I just go to highs. But it also depends on my initial entry because I usually go 5 points and then TP2 is automatically 8 points. I don't care if there's a high or not because you don't know, like, you could have a shitty entry, you could not have a shitty entry. So I just stick to like what my entry could be. We never got an entry. We only got an entry here at this 2 minute over here. Let's see. Oh no. So yeah, we got to fill here at this 2 minute. So say we get filled at the CE of this 2 minute. Basically, if we were to enter off of that 2 minute, TP1 would be 5 points. What is 5 points? Right there would be TP1 on one contract. On one contract on ES, that's $250. So just keeping that in mind. So TP2 would be 8 points, and then if you want to go off of points or highs, you could do that. I go off of points for my TPs, but yeah. If you go to the 4 hour, why am I so confident that the draw is higher? Essentially, is it the 4 hour or the 1 hour? On the 1 hour, if you draw a fib from the high to the low, right? It's around this level, right? So if I know price had a very rapid around a week that we just sold off, right? If I know market has a rapid sell-off and now we're kind of trickling down and we're also taking out sell side liquidity down here while also rebalancing a bigger time frame fair value gap, that just gives me more confidence for longs. Also, something to have in mind, basically, if you have a valid risk to reward ratio with a valid strategy that you've back tested, which this has been back tested, I just want to show you basically what you guys should be thinking when entering a trade. So if you have an 100k eval, I'm just going off of the top step numbers. Your profit target's 6,000 and your max profit in one day is 50%, which is 3,000. So you can't make more than $3,000 in one trade, or else they'll flag you. And yeah, you want to go through all that. So basically, if you just have if you want to go conservative and have a 0.5% risk to reward ratio, you risk $500. A risk to reward of 1 to 2, meaning that you would make $1,000 profit. Or if you have a 1 to 3, you would risk 500 to make $1,500. Right? And if you risk 1%, these would be the numbers, right? So with that in mind, if we were to take this trade on Friday, we would already be around 20 to 30% away. Done with our PT goal of 6,000, right? So if you do this 3-4 times and you have valid risk reward ratio, you could pass these challenges fairly quickly. But you really see this happen in all time frames every day. There's a usual liquidity sweep and impulse to move the other direction. So yeah, I just wanted to keep this in the video because it's very important that you guys see this. If you guys want to screenshot this and go off of that, I would advise staying to 1% risk to reward ratio. And just keep in mind that your first trade is the most important trade, in my opinion, for the evals. If you start your eval with a 1% or 1.5% gain, you're already, 20% done with the task. If you start off with the L, on the other hand, it's not the worst case scenario, but yeah, it does happen. So just try managing your positions correctly and having valid risk to reward ratio. You guys should be fine. If you have any questions, let me know. And yeah, catch you on the next one.